In this video, you will learn about the tax deductibility of pre-commencement expenses. Pre-commencement expenses are expenses incurred before a company starts its business operations. Generally, pre-commencement expenses are not tax deductible, since they are incurred for the purpose of setting up the business and not wholly and exclusively for the production of income. However, with effect from the Year of Assessment or YA 2012, companies are allowed to claim tax deductions for revenue expenses incurred 1 year prior to the deemed date of commencement of business. Revenue expenses are expenses that are wholly and exclusively incurred to run your day-to-day business operations. So how do companies determine the deemed date of commencement of business? A company is deemed to have commenced business on the first day of the financial year in which it earns its first dollar of business receipt. Let's see how this can be applied to SE Pastries Private Limited. SE Pastries started its business operations and earned its first dollar in 20X2. Prior to this date, SE Pastries had incurred some pre-commencement expenses such as rental and utilities. Are these pre-commencement expenses tax deductible? SE Pastries earned its first dollar of business receipt on the 1st of March 20X2. The deemed date of commencement of business is the first day of SE Pastries' financial year in which the first dollar is earned. SE Pastries has a 31st of December financial year end. Hence, the deemed date of commencement of business is the 1st of January 20X2. Revenue expenses that SE Pastries incurred from the deemed date of commencement of business are tax deductible. In other words, revenue expenses incurred for the Year of Assessment 20X3 are tax deductible. In addition, revenue expenses incurred 1 year prior to the deemed date of commencement of business are also tax deductible. For tax purposes, these expenses are treated as incurred on the deemed date of commencement of business. So the revenue expenses incurred by SE Pastries from the 1st of January 20X1 to the 31st of December 20X1 are treated as incurred on the deemed date of commencement of business and tax deductible in YA 20X3. Now let's examine the expenses that SE Pastries incurred in 20X1. In 20X1, SE Pastries incurred rental expenses, utilities, as well as legal fees to incorporate the company. Are all these expenses tax deductible? Utilities and rental expenses are tax deductible because these are revenue expenses. How about the legal fees? Legal fees incurred to incorporate a company are capital expenses. Hence, they are not tax deductible. Let's recap. A company is considered to have commenced business on the first day of the financial year in which it earns its first dollar of business receipt. Revenue expenses incurred during the financial year in which the company earns its first dollar of business receipt are tax deductible. Revenue expenses that are incurred 1 year prior to the deemed date of commencement of business are also tax deductible. These revenue expenses are treated as incurred on the deemed date of commencement of business. You may visit the IRAS website or contact us for more information.